Matthews here from Emmanuel Forex Traders. I hope you're doing great. I hope you had a great week. So I'm here with a trade recap. A weekly review of trades that we took last week. Just a summary. As you can see in front of me, you have a summary of trades that we took and the results. Yeah. So at first glance, you're going to actually see a lot of raids, right? Meaning we lost a lot of trades, which is very normal in trading. Okay. So, however, if you look down here, you're going to see that we are net positive. So, what does this tell you as a trader? What does it tell you? I always emphasize this. You and I have no control over outcome. You and I absolutely have no control over what's going to happen in the market. At any particular time, anything can happen. What do you and I have to have is an age. And what is an age? An age is nothing more than a higher probability of one thing happening over another over a series of trades. So you need to have a strategy that has proven to work over time. And that strategy must have shown you that it has a positive expectancy over a series of trades, not on a trade by trade basis. On a trade by trade basis, as you can see, anything can happen. We execute one system, but it's able to give us different outcomes at different times. That's how the market plays out. You and I have no control over what's going to happen. No matter how much confident you might be in a particular setup, there's no way to know if that trade is going to go in your favor or not. You can't know. Therefore, you should be able to control how much you are willing to lose on a given trade and really predefine it and accept the risk of that particular trade not working out. And once you've done that, all you have to do is execute your edge flawlessly while respecting risk management. That's the key to consistently profitable trading. Consistently profitable trading is not about winning each and every trade or having a 90% win rate. These things will come. The losses are going to come. What determines if you're going to make it is how you're able to manage your risk, right? So, for example, if I show you this particular trade setup that we had on Friday, this is one of the best setup I will ever find. Like, this is one of the best setups I can trade. I can trade this kind of setup any time of the day, right? We have a very, very nice RR-based drop right there. This is the long-term downtrend. Price is pulling back to our level. We have a lot of trend line liquidity right here. And guess what? Once price starts to come to my level right here, I prepare to sell. And guess what happened? The market went to the upside. Let me just show you right now. The market pushed to the upside and took us out. So if you zoom out, you realize that this is a downtrend. If you go to the daily time frame, this is a downtrend. All right. So the base is to look for selling opportunities in a downtrend. All right. So find the level where you can actually sell from. However, it does not tell you with absolute confidence that this trade is going to actually go in your favor. It's all about probability. The sooner you understand that, the better, right? Then what you have to do is execute your system flawlessly, execute your edge flawlessly, respect risk management, and you know that risk management has got a direct impact on your psychology. So in order for you to avoid having those high emotions, for you to avoid revenge trading and having FOMO, make sure that you are also using proper risk management. Those emotions are going to be there. You're going to experience emotions, and emotions are simply a signal to tell you that, okay, something's not right here. You might be doing something wrong. For example, if you enter a trade using a bigger lot size, the emotions are going to be there to tell you, all right, bro, you are using a little bit of bigger size right here. Reduce on your size. If you decide to ignore your emotions, then you get to self-sabotage, right? So emotions are so much of an integral part of your trading that you should always continuously work on them. It's that important. All right. So this is the power of execution. You find your age presents itself, you take the trade. You predefine your risk and take a trade because you know that on a trade by trade basis, absolutely no one knows what's going to happen. But you know that when you execute your age flawlessly, you're going to make money. Guaranteed, right? If you follow all your setup, if you follow your system, whatever your system tells you to actually do, if you follow that, you are going to be profitable, provided you backtested that system and that system has shown you positive expectancy. You can see that on one particular trade, anything can happen. Therefore, you have to shift your mindset from thinking about a trade by trade basis and start focusing on a larger sample size, a series of trades. That's how you become consistently profitable. On one individual trade, you're gambling. Anything can happen. Anything can happen. But you must have the confidence to execute your age over and over and over for you to look at, for you to be able to have that positive expectancy. You must have that confidence in your system. If you don't have the confidence in your system, simply means that you've not done the work, you've not done the back testing. Once you do the back testing and your system has shown you that it's able to become profitable over time, there's no reason for you to get scared. There's no reason for you to not to take the next trade because you know that when you execute your system over and over, you make money. That's the reason why over 90% lose money because once they executed the age 2, 3, 4, 5 times, they have 5 times in a row, 5 losses in a row or 10 losses in a row, they quit. They start to chase other system. They think there's a strategy out there which is the holy grail. There's no such a thing. That's the reason why a lot of people fail in this industry. You don't have the confidence in your system, you don't know how to execute your age. Therefore, immediately you encounter a little bit of adversity, you give up on that system and you go to the next. All right, that's how 90% fail in this business. That's the reason why 90% of people fail in this business. So for you to overcome that 90% failure rate, you have to think different. You have to think different from the 90%, from the way that 90% think. The 90% think that there's a strategy out there which wins all the time, which is wrong. 90% of people out there are focusing on finding that holy grail strategy that wins every time, right? Only a few percent of traders, those that are actually consistently profitable, are the ones that are focusing on the most important aspect of trading, which is your psychology. That's where your age lies. How do you manage yourself after a losing trade? How do you manage yourself after a losing week? Because those things are going to happen. That's going to determine how you're going to actually fare in this game. It's not about the strategy. You can have the right strategy out there, you can have the best strategy out there, but if your psychology sucks, you will lose money. You will not make money in this trade. You can make money in the nine trades and lose it all in one trade because you've used bigger lot sizes. All those things are psychological things. It's not about the strategy. So you must be able to make sure that you take care of your psychology. Losses are going to come. However, you have to make sure that your age wins overall more than it loses. For example, this trade alone covers all these losses right here. Just this one trade. That's how it is. The power of risk to reward ratio. It's extremely important. I only need 1 to 2 wins to be profitable in a week. Just 1 to 2 wins. Now the question is, can you handle yourself when you have these strings of losses? How are you going to handle yourself when you have 5 losses in a row? Most people don't. Most people can't. Most people are not engineered like that. It's a learned skill. You must learn the skill of managing yourself. That's the most important part of trading. You must work on your mind 90% of the time. Once you have your edge in place, once you have your strategy in place, spend 90% of your time working on your psychology. That's extremely important. Trust me, you cannot make it in this game if your psychology is not at that level right there. How do you develop your psychology? You read books about trading psychology. You read books about mindset. You read books about meditation. You learn how to meditate so that you remain calm under circumstances like this. This is a high performance career, right? It requires you to be at your very best psychological. If you can't do that, you won't be able to achieve consistency in the market. It explains why over 90% of traders fail in this business, right? So I hope this is helpful. It's not about the win rate, it's about the risk to reward ratio. It's not how many times you win or lose, it's about the risk to reward ratio. How much are you winning when how much are you making when the trade goes in your favor? How much are you losing when the trade goes against you? Make sure you're risking. I would advise that you're risking less than 1% of your account per trade and stick with that. On every trade, make sure that you risk less than 1% of your account, so that even if you lose 1% of your account, you won't be emotionally attacked. You won't have those emotions when you lose a small amount of money or in relation to your account. However, if you're risking 10% of your account per trade, definitely you're going to have those high emotions right there. All right. So I encourage you to actually read Mark Douglas, both the discipline trader and trading in the zone. Learn how to meditate. Make sure that you keep your mind in the level where you're able to maintain and stay calm under pressure. That's what professional traders are concentrated much on. They're not looking at the next strategy out there. I'm not looking at, oh, there's this strategy out there that wins 90%. Oh, there's this. If you come with that preconceived mind, it will be very difficult for you to make it in this industry. So I hope that you've gathered something from this little ramble. I hope you got something. If you did, make sure that you subscribe, like the video, comment in the comment section. Let me know what you think about this video. You guys, until next time, goodbye.